We're up around 0.6%, 9.2 billion rand passing through the market. Yeah, so much drama, it's tiring.
Yes, yes. You know, you must remember the market's a little bit better today. Hey, but it took a thump yesterday.
Absolutely.
And I'm just worrying, it's a little bit of bounce. I hope it's just not a dead cat bounce that goes boom and then fades out again.
Because that's what we normally experience.
That's right. And so I'm a bit nervous of it. I couldn't be persuaded to get in and join this as a recovery.
You're not joining in at all at this point?
No, it's too high.
Absolutely. Well, let's touch on the top 40. We've got Anglo, which was up 3.5%, top of the top 40.
Yes.
Remgro also doing quite well today. Vodacom up 2.25%. So strong movements to the upside today.
Yes, yes. And I mean, Anglo, okay, there's this sale of the stake in the Canadian, I beg your pardon, Chilean copper company, and of course that's bringing in another $5 billion plus, which makes up for the $5 billion they're paying for De Beers. Well, you've got to give them full marks for cash flow management. That's why I like them as a diversified resource company.
Goldfields also out with results today, and this stock taking quite a knock, losing 3%.
Yes. I mean, what were investors hoping for? You know, it was very close. It was in 1% of the average estimate of where they would get to an earnings per share. So I don't think that that's too bad. In fact, I think that's pretty darn good. They made it quite clear that as long as the gold price stayed around where it was, and just as important, the rand stayed where it is now, relatively weak, they're going to have stellar earnings in the year as a whole.
But not silly enough for you to actually get in and buy.
Oh, I don't know. I think about it. You know my view. If it's got to buy anything, I'll buy gold.
You'll buy gold, even a gold mining company?
Yes.
And Anglo Gold Ashanti, were you impressed with those results that were released earlier this week?
Yes.
Down around 0.5% today.
But not a surprise. Not a surprise. You know, and I just wonder whether Goldfields and for the long risk takers, Harmony might be the interesting ones.
We also had news out of Truworths. Sales for the first 19 weeks of the 2012 financial period increased by 9.3% to 3 billion rand.
Yes, that's pretty impressive. But remember, a lot of stores opening on like-for-like sales, it's only up 4%. So, you know, it's not that huge, and I think it's a pointer to the retail industry as a whole. Here's a leader that's only doing that much.
And Truworths is actually down just over 1% today.
Yeah.
So market not really taking it in its stride.
That's right, I think so.
But for Sheeny, very different numbers that we saw a while back, where we actually saw fantastic double-digit growth. Zara, of course, just officially opening up in Sandton, competition heating up.
Sorry, I'm not in that field of shopping, but yes.
You've heard of Zara, though, I see.
No, yes. I think that is the best managed of the retail stores. They've positioned themselves correctly. They've got a unique placing for themselves.
Let's touch on Telkom, also out with the trading updates. Basic earnings per share expected to be between 68 and 73% lower. And one always wonders with regards to Telkom, how much worse can it actually get?
I don't know. Leave them in business and we'll find out. Sorry, I'm a bit cynical about it, but they shouldn't be allowed out of the rand arena. They should be kept here. And I think it's just they are the best case that can be made for privatization.
So you think that Telkom should be privatized?
Yes, I do. Because just look at their record. They had this superb relationship with Vodacom. That's gone. I don't know whether they jumped or they were pushed, but really they've done nothing useful with the capital they
Would
released.
you be buying Telkom at any point?
No.
Okay. Let's touch also on SAPI. That was out in today's session. We've seen quite a bit of volatility within the paper making industry, but consolidation is happening. Mills are being closed, so this should be good news.
It's a tough field, a really tough field. But in this, in their special paper niche that they have, they're certainly leaders. And you know, the paper that goes into upmarket magazines, and I think that they are leaders in that respect. And hopefully, this will help in the longer run. But is the move not away from printed media into other forms of media? And that's the ongoing battle they have to face. They're not diversified out of print.
Speaking to the Business Connection CEO in just a bit, full year diluted headline earnings per share of 17.2 cents.
Yes.
Total dividend per ordinary share coming through at 54 cents, and special dividend of 40 cents.
Of that 54, special dividend was 40 cents. I think it needs some explanation. I think it needs a harsh question. I think you're good at that. You must please
Should I ask further?
So that we know what's happening there. It's a bit of a... It's a big query mark now.
Okay. overall in the market space, you said that it's, you know, not conviction enough, just seeing this little bounce that we saw from yesterday's diet performance, not enough reason for you to enter into the market. No. But the truth is that South African markets haven't performed as badly as the other emerging markets. So we've got something to smile about, surely.
Sure, absolutely. And we have to say, well, look at the Aussie where it is now, 32,000, very close to its record high, just over 33,000. At when it first got there, we had an average PE of 18. Now it's only 12. So there is a case to be made for better value there. But I think looking ahead, that is the big problem. It needs to have even better ratings.
Better ratings, but surely when you see the PE, lower ratings with the PE of 12, surely that is reason enough to buy into the market right now. It's looking so attractive.
Well, don't forget that when we had this big run over the last year and a half, it started at a PE of 8. Food for thought.
Absolutely. Are you still of the view that continued pressure could come through from the Eurozone in the form of Italy now perhaps needing to seek a bailout?
Absolutely. You know, they're going to be so internally focused, it's going to be very difficult for them. The banks there don't trust each other. They've got zero risk profile. It's going to be very difficult for them to want to take our exports. Remember, they're our biggest export destination as a block of countries, and so that can have an impact on South Africa. Trade account, current account, rand exchange rate. I'm a bit nervous about the climate there.
The ruling with regards to Julius Malema and the nationalisation debate, do you think that's put to bed? Speaking to Peter Tartman-Talto a little earlier, he says that now the debate has actually moved higher than the ranks of just the Youth League, so that is going to be intact. But he's not convinced that Julius Malema has been put to bed completely.
Well, who's behind him? I don't think it's all Julius Malema's ideas, quite frankly. Certainly he's been quite a shrewd operator up until now. Let's see who backs him in the future. That'll be very interesting. But the nationalisation debate hasn't been put to bed. They've already said that's up for discussion at the ANC Congress.
Rates unchanged today. Were you disappointed?
No, I think it was to be expected. You know, I heard your last interviewee talking about the possibility of a rate cut or two in the first quarter of next year. Well, what I've got to say is, hey, just look at inflation. It's going to go steaming through the top of the target band. We've got food inflation, fuel inflation, electricity. All these are adding up to the risk of putting it up even higher than their present estimate of peaking at 6.3%. It's going to be very, very difficult to bring interest rates down with that in mind.